Hello guys, you're welcome to my channel, and today's video I'm going to be doing a breakdown of how I caught a 13-hour plus trade on USDCHF, right, using the MSNR and CRT strategy, right. So if you are new here and you are yet to subscribe to my channel, please make sure to subscribe, like the video, and turn on notification bell so that you can be notified whenever I post useful and helpful content like this. Alright, so without further ado, let's get straight into it. So over here on USDCHF, the first thing we want to do is to identify what's the market direction, right, from the higher time frames. So from the monthly, what can we see? We can see clear bearishness in price, right? Serious bearishness in price. Then, so we have this as the most recent break of structure on the monthly, right? And then price started pulling back. So over here, identified this as what my monthly key level, and that's an open close key level that has been rejected once before. You can see that it has been rejected once, and now price came back to it, and we could expect what, another rejection. So of course price came back to it and rejected it again, right? Swept the liquidity of that high and did what? Rejected off it, that key level. So it means we could be anticipating and expecting what? More sales, right? So going down to the weekly time frame, this is what we have. This was the sweep right here. Yeah, so that's the sweep. Okay, and now we have what? This to be what? Our weekly key level. So weekly rejecting weekly. Then I went down to the daily time frame, right, and refined this what to my daily time frame POI, which is what? This QM level here. This is the QM level right here. This is what? A V-shaped key level that was disrespected twice, right? So a QM is basically what? A key level that was disrespected twice. For example, in this case we have what? This to be a V-shaped key level, right? Price came, disrespected it the first time, right? Second time, even the third time, right? And came back, pulled back to it, and now is what's sponsoring what? Sells to the downside. Okay, so that's basically what we have there. Even we have this open close key level, right, that's been rejected once. So just want to be creative with it, right, and identify and try and refine your key levels as much as possible to the lowest time frame possible, right? So I had this as the daily, rejecting daily, sweeping liquidity of that high, and then coming down to the 4 hour. We want to see what a sweep and a break, right? So this was the first sweep on the break here. So it's a sweep and a break. This was the break, right? And then this was liquidity. Okay, this was our internal range liquidity. So I took a loss here, right? I expected price to hold from here. Okay, this was a 4-hour key level, so we rejected, and then I got my 1-hour breakout, right? And then I entered off what? This 4-hour key level, and price just tapped in. You can see right here, tapped in and was dumping gradually. Then all of a sudden did what? Cleared it all out, right? But this XR range high that caused this market structure shift has not been taken, so the sales was still valid, right? I just had to step back a bit and watch what the market does, right? So that is one thing that is really important, right? You don't just run away because you took a loss, right? After a loss, you step back a bit and then try and observe what the market is doing, right? Try and reinforce the higher time frame narrative and check if you're still in place. So long the higher time frame narrative, your top down analysis is still in place, then you're good to go, right? So I just had to step back a bit. Then this was what I saw. After this, here we had what? Yet another sweep right here and break of structure of this low. So right after this break of structure, right, I took a direct entry from here. It was my entry. Okay, right here. Okay, I'm placing my stop loss above what? This high, this very high. Okay. On the daily time frame, okay, we had this high taken, right, giving us what? Our candle range high, and this as our what? As our candle range low. Right, so these are candle range low. So this was where my target went to. This was where my target was. Okay. Okay. All right. So this was liquidity, right? Then this was the internal range liquidity that I had. This was internal range liquidity that I mapped out, and then I took my entry from this key level, the next key level, right next to it, right? You want to take your entries from the key level closest to the liquidity, right, to avoid missed entries. And then I placed my stop loss above this high, right, and for exactly 10 pips. And then my target was initially at this candle range low. You can see this, right? So this played out a beautiful 14.98 hour, but this was where I closed out my profit, okay, somewhere here at 13 hour thereabouts. Now why is that? I'm going to show you that. Going up to the weekly time frame, you can see there's a clear V-shaped key level right here. Okay, there's a clear V-shaped key level, right, that could sponsor rejections right to the upside. Then I refined it to this key level right here on the 4 hour. So this was where my exit was, right? So I just wanted to watch and see how price plays around the entry. Okay, so the moment I saw that price rejected 4 hour, rejecting 4 hour, I already had some sort of like an external range liquidity cleared. Okay, so it's a break of structure, and so I saw the way price was moving, and then I had to do what? Exit. Had to exit here, right? So you can see how that played out beautifully, a 13 hour, right? So but you can see after price ranged a bit, it still did what? Came collapsing and took out this candle range low right here. Okay, you can see, so this would have been the full trade outlook, right? Just about a 15 hour. So you can see how easy that is, combining the power of MSNR and candle range theory, right, in catching high probability setups. Okay, the candle range theory is simply the power of 3, right? It's simply the power of 3, right? Like in ICT, let's say you have a key level here. Let's say a higher time frame key level here, and then you have price approaching that key level, Let's say you have price approaching the key level like this. Yeah. Okay. Say something like this. And so you have price doing what? Projecting close to the key level, but they didn't come in contact with it. Okay. And then the next candle does what? Opens, right? Sweeps the high of that candle and taps into the key level, right? And closes what? Within the range. Okay. And let's say this closes what? Bearish. Okay. This has to close bearish, right? To make it more powerful. Like you can see, in this case, the high was swept and what? The candle closed back in the range, bearish. You can see that, right? This high was swept, the candle closed what? Bearish. So that gives us what? When you see something like that, that gives us what? A very powerful setup, right? For directional bias. Okay. So this is simply how it works. Now, a lot would say that this is the candle range what? So it's candle range high, right? And the candle range low. That is still correct, but overall, this is what the overall target of price. Okay. This series of up close candles, right, that led to price, right, approaching that key level. This series of up close candle, okay, would give us what? Our candle range. Okay, so that's basically how it works. Yes, this is basically the concept, right? So of course you have wicks, yeah, and vice versa, right? And vice versa. Then in this case, this would be what? Series of bearish candles all the way. So we have a series of bearish candles, right, approaching a key level, and then we have the very last candle, right, didn't come in contact with the key level, right, and then the next one opens, right, it opens and then pushes lower, sweeps the liquidity of this candle range low, of the low of that candle, taps into the key level, and then closes backwards, bullish in the range. Okay, closes back within this range. So this will now give what? This will now give us what? Our candle range low, and this series of down close candles, our candle range high. So we can expect what? For price to do what? Trade lower and then take out what? This candle range high. Basically, this is what? A very powerful tool for what? Directional bias. Okay, it's a very powerful tool for directional bias. So we'll have something like this. It's expected that the third candle should do what? Expands, right? And takes out this. That is when it's just one candle, right? One candle. But of course, this is going to be a series of up close candles, right? We don't expect one candle to take out the candle range high, okay, in this case. But this is just an example. So we could have something like this. Could have something like this. So price opens, taps lower, maybe into a key level, or we have a structural shift, then begin to have what push to the upside. Okay, begin to have that push to the upside, and we can just keep doing what, looking for what, buy continuations, buy entries, all the way until what, this candle range high has been done, what has been cleared. So this candle range high has been cleared. Okay. Right, so this is what a very powerful what system, right, used in doing what, identifying what's your directional bias from the monthly to the weekly, right, and to the daily. So you can see that's the perfect example that what's used right here. So you can see this was the daily key level. This daily key level, we had what, this series of up close candles, and then we had this last one, this last candle printing close to the key level. Then the third candle, or the second candle rather, pushed above, cleared the liquidity of this high, and then closed back in the range bearish, giving this what as our candle range high, and this as our candle range low, right? So that is basically it, and you can see how price did what, dumped beautifully. That would be all for today's video. Make sure to subscribe and share, right, and leave a comment in the comment section below. If you have any questions, I would attend to your questions. Also, if you want to be part of my Telegram channel, I'll drop the link in the description below. Use the link to join, to be part of my community, where I journal my trades and I share helpful insights to help you constantly be what's profitable as a trader. So that'll be all for now. See you guys in the next one.